Well, hello everyone. Welcome to Trading Price Patterns. My name is Barbara Armstrong. I'm a coach with Schwab. And today we're going to have a kind of combo conversation. We're going to talk about diagonal resistance breakouts. And then, because it seems to be the trading pattern du jour, and then we're going to talk about conditional orders. And why is that? Well, because we've seen just tons of stocks create these diagonal resistance breakout patterns. And then today, a lot of those stocks are pulling back. So let's say you're going on a vacation and you want to be able to get into something right when the opportunity appears, but it's not appearing yet. And so that's what we're going to talk about today. So I hope you're intrigued. I've got Mr. James Boyd riding shotgun in the chat. He's a friend and a fellow coach. If you have missed his classes the last couple of days, please go back and watch the archives because they were kind of not to be missed events. And he'll be teaching again this afternoon. So just in case you wanted to catch him live, you'll see him this afternoon, I believe at 4 o'clock Eastern, right, James? Yeah. If you aren't following us on X, you're missing out. James Boyd CS and Barb Armstrong CS. So be there, be square. It's another free resource and a way for us to communicate with you and you with us outside of webcasts like this. This is a companion class. I treat this as a companion class to the Trading a Smaller Account class. So our position sizes tend to be modest in this class. And if you're not joining me for Trading a Smaller Account, those classes happen Mondays and Fridays at high noon Eastern. Know that options carry a high level of risk and are not suitable for all investors. We use the Paper Money software application on the Thinkorswim desktop platform. A brilliant place to learn. Make sure you understand your trading strategy and have a plan for it, and understand the mechanics of how to place your trades on the platform. There are some nuances and differences. One is that short options will never be assigned early in Paper Money, and that can happen in a live account. Now, this is considered to be an intermediate level class, and by that I mean that the assumption is that you understand some of these trading strategies that we are talking about. And if you don't, it may be a little bit like drinking out of a fire hose. Now, I love how participatory everybody is in the chat. So if there is a strategy I bring up that you're not familiar with, please let me know and I'll give you the 10-second overview, and then I can point you to a resource on it where you can get, the whole enchilada. So the only announcement I have to make is that I have a grandson and I am on a plane tomorrow to go and visit him. I'm going to be visiting his parents as well. But we all know, those of you that have kids and grandkids, what the true driver is to get you on that plane. And so I will be out Thursday and Friday, but I've got people covering for me and they always do an amazing job. So yeah, and then I'm back on Monday. So let's go out and have a quick look. And Kevin Horner is back from a week on vacation with his family. And he does such a great job at that 7:30 spot in Trader Talks. I direct you there for a detailed overview of the market. But when we look at the S&P 500, we saw this pullback into correction territory. The tariffs, the market really likes stability. They like things to be kind of steady Eddie. And so far this year, we've had a lot that has not been very steady Eddie. And the markets don't tend to like that. But, the last couple of days, we've seen this rebound. And here's our first diagonal resistance breakout. And today, what is it doing? Pulling back. And if we come to the Market Watch tab, and I've got the Index Watch up, we've got, yesterday, 88% of stocks were moving up. Today, we're closer to 50-50. Well, 52% moving up. And so, but the ones that are moving down, if we come and we switch this to our heat map, it's some of the big boys that are moving down. And when you have these heavy hitters moving down, it doesn't matter that over half the stocks are going up. It's enough to drag this index down so far today by 1%. And then when we come in and we look at this pattern, We could put this in a textbook for candlestick patterns, couldn't we? And what would we call that pattern? Any guesses? They call that an evening star. So you have a big up day. In fact, we gapped up, and then we have a hanging man pattern. And then this candle, they want it to go through a lot of the body of this first candle. Well, it's like pretty much through the entire, we've given back pretty much all of the gain from when this opened on this day. Now we still, we've got a big gap that is still there. Okay, so that's the S&P, and the NASDAQ is kind of more of the same, right? Like still up year over year, but this index came back even further. And then again, another diagonal resistance breakout, gapped up, and so this was Monday, yesterday, and again, a fairly small body candle, not as picture perfect an evening star pattern, but still a pretty similar configuration. And so does this mean that this breakout was a fake out? Not necessarily. It's not unusual to see after, a move like this. So if we come from, let's just, even just this last 3 days, that was a 4.5% move. So are we surprised to see this pullback? No. But, are we confident enough that it may not pull back for another day or two to start placing bullish trades? This is where a trader wants to exercise patience. And some people say, patience, not my strong suit. Well, you want to develop that skill, my friends, if you want to be a successful trader. And so how might a trader exercise patience? Well, let's come and look at one of the most simple ways that we could do that. We look at Carvana, and here's another, stock. In the last year, it's gone from 67 to almost $300 a share. Like that's an extraordinary move. And, then we had what? A diagonal resistance breakout, right? So if I start from here, and you can start from anywhere, and as James has said to you many times, if you follow James, you want to just kind of kiss as many candles with this line as you can. So, our first day breakout was here on the 20th, and then it followed through on the 21st, and then gapped up on Monday, and now we have this evening star pattern. Pretty classic. And if you're not familiar with all these candlestick patterns, I'm creating a series of really short videos. They're all kind of 3 or 4 minutes long, and they're in the trade management mini section section right now. They're also in the getting started with technical analysis. But if we look at this, we might say, ooh, that's a big candle. It could pull back for a couple of days, but it could also be a one-day pullback. And so if we look at this and we say, well, the high today is 222, we could simply just say, you know what? I'm going to place an alert on this. And if it goes above this 222.66 kind of level, call it 222. If it goes above that, then maybe we want to consider getting back in, or we want this to be 222.80. So if it goes above today's high. Now, tomorrow, you might want to have this on a shorter term watch list, because if tomorrow it pulls back and then it starts to rally, you may not want to wait until it gets to 222.80 to get into the trade. So this isn't I've set my alert, I'm now going to sit on my deck and enjoy the sunshine. But this is one way that we can position ourselves to take advantage. Now, let's go from there to Affirm. So what does Affirm do? Do you know what this company does? So if you're not familiar with this company, you can just come to the Analyze tab, and you can see it's part of the financial sector. And, they operate in the US, Canada, and internationally. They were founded in 2012. And so it's a point of sale payment solution. I know that I buy my annual ski pass, and it costs me no more to pay for it all up front than it does to pay for it over 6 months using Affirm. And that's why I kind of know a little bit about Affirm. So somebody's saying my candlesticks don't look like yours, and I can address that. But the reason I bring this up, that it's in the financial sector, is this kind of more of a tariff averse or tariff agnostic type of stock, in that we're not moving goods back and forth across the border. Of course, if people aren't buying the products that are moving back and forth across the border because the prices have gone up, and then they're not financing said products that they're not buying, this could have an impact on the stock, right? But again, here's a stock that's gone from $22 a share last August up to 80, back down to, 48. But might we want to do a short-term trade? And you might say, I could see it bouncing. I'm not sure if it's going to go back up to 82. Well, could we do this kind of one ATR type trade? And if you don't have that on your charts, if you just come to studies, edit studies, and then here's ATR, you can type it in at the top, but, given it starts with the letter A, and then add it. And what this does is it says, hey, over the last 14 days, here's how much Affirm has moved on average. And so could we use a conditional order and say, okay, it's pulled back for the second day. The high is 50.85. And I've just already taken some notes here. So if I come to the trade tab and I say, okay, I would like to buy 100 shares of Affirm, but I only want to buy it, and we're going to do this custom with an OCO bracket. I only want to buy it if it goes above, and you can do a buy stop, or for some reason, the way my brain works, I kind of like to put it in as a conditional entry. So I only want to buy Affirm if it goes 20 cents above today's high. So that would be 51.05. So I've just taken today's high and added 20 cents to it. So 51.05 is when I want to get in. And then I'm going to put a target, which says, hey, if on average this moves about $4.29 in a day, or $4, it was $4.28 when I looked at it, then I'm just going to take this conditional entry of 51.05 and I'm going to add that $4.28 to it. So I'm going to make my target to get out if it hits 55.33. So I'm just looking for a little win, a base hit. But if you think about that, if we get in at 51.05 and out at 55.33, we're up, over $4 a share. And this is a $51 investment. So that's got to be, if we're up, say $4.20. So let me just, if I take 420 divided by 51.05, and this is a small account, so, we don't have tons of cash. That's an 8% return for what we're looking to be a short-term trade. So sometimes people think, well, you can only do that short-term target with an option. No, we can do that with a stock also. And we're saying we only want to get in if it goes above today's high. Now, if tomorrow it pulls back again, are we, might we change our entry? Absolutely. And so we're going to put this in our stocks with a target, and we're going to make a note here that our target is 1 ATR, the amount the stock moves in an average day. So that's the second way we can look at a stock and say, okay, I see a diagonal resistance breakout, but I'm going to be cautious with my entry. And our target on this was 55.33. If we wanted to put that on the chart, oh, did I put in, I don't think on that. I got busy thinking about the next thing I wanted to do. So here is our 1 ATR target. I don't think I put the stop in, 55.33. So let's go back and correct that. Because what the system will do when they put in an exit is they will automatically put it in $1 below where it's currently trading. So this is our stop. We want our stop to be 1 ATR below today's low. So we would make that 44.05. So we're going to cancel and replace this and make this 44.05. Now, when we get in, might we change this? Absolutely. But just to get us going, and that is that $4.28, that 1 ATR below today's low. Confirm and send. So now when we come back and look at this, we've got our target and our exit, and it's waiting for this position to fill. Okay. Yes, Brown Buffalo said, what about the stop? So you were more with it than I was on that one. So good catch. Okay. So that's the second one. So third one, and I looked at Meta, and do we see the same kind of thing? Where we had this pullback, came down to the 100-day moving average, and then moved up and is pulling back. Now, this one bounced off the 200-day moving average. We also have another stock that's kind of a household name, similar type of pattern, right? But if we're looking at it, and apparently there are new tariffs coming April 2nd, which stock is more likely to be impacted by tariffs? Might it be Amazon? Now, we have Amazon Prime, that's part of it, which is delivering content as opposed to product at your door. But it's a pretty hard goods centric company also, isn't it? And so might that be more impacted? And if you're saying, well, I've got limited resources and I have to choose, and I'm looking at one versus the other, might I choose the one that is more tariff agnostic? And again, we have this evening star pattern setting up. And after yesterday's candle, are we surprised to see a pullback today? No, because this is saying, hey, the buyers and sellers duked it out and ended up kind of right where they began. The buyers drove it up part of the day, and then the sellers pulled it back down. And at the end, they ended up about where they began. But could we look at this and say, okay, today's high is 626.75. If it goes back above that, now, can we afford to buy a call? No, we don't want to risk more than $500 on any one trade. So if we come out here and we say, well, if today's high is 626.75, and I add 20 cents to that and say, hey, if it goes above today's high, get me in, what might I choose to do? Like, given these are, almost $4,000 options by the time they're at the money. So we're not going to buy a call. But could we say, if we get in at 626.95, almost 627, if we look at it, this is at 611. If we did the 600 and the the 610, 615, if we bought a vertical, what would that cost us? About $258. So if we said, well, get us into this vertical at 625 and 630, and currently it's saying 228. Now we know it's going to be more than that, but we might say, and we're willing to pay the market price Now, might you do an alert? If you were going to be looking at your system every day, you might choose to do the alert. But if you're going to be out of town, and maybe not looking at your charts as much for a couple of days and don't want to miss an opportunity, you might just say, hey, if and or when Meta goes above 626.95, then buy this vertical. And then once you get into the trade, then you can put in your target and your exit if you want to put in a target and an exit. In our example, trading plan on the a trade management in that section for long call verticals, we tend to put in a goal of getting out if we're up 50% or down 50%. But this says, hey, get us in only if Meta goes at or above 626.95. Now, have we been talking about these more frequently of late, these conditional type orders? We have. So we're going to tee that up. And one of the ones we did was on Delta. And we were bearish on Delta, and we set up a long put on Delta. And so, one of the things that I really appreciate about a conditional order is two things, because we did two trades that day. We did one on Tesla, and we got in, on that trade right at the exact right time, and we got out like one trading day later and it hit our target. With Delta, this stock, we wanted to place a bearish trade, and we said, hey, if it goes below this day's high, we want to exit. Now, I thought we were already out, that we'd already canceled this, but this didn't end up going down. So what did this do for us? Well, it prevented us from anticipating and trading what we thought was going to happen. We said, no, we're going to put a conditional order in, and unless we see it, that trade isn't going to go in. And so we have avoided placing a trade that would have turned out to be unsuccessful. James, if your audio isn't working, what you may want to do is hit refresh. Okay. And if refresh doesn't work, then log out and log back in again, and then you should be all set. Okay, so what we're going to do is we're going to come to the monitor tab. We have a buy order here. And when we come, these are organized alphabetically, and you can see that there's a wait condition. We're just going to cancel that. Yeah. And then, we could throw our shoulder out for patting ourselves on the back, right? For avoiding having placed a trade that would have, been unsuccessful, because we had the discipline and the foresight to not trade what we were thinking, but instead to place a trade based on an entry that would have been following our rules. Now, somebody had asked a question about the charts, and one of the reasons my chart might look different from your chart, one of the reasons the candles may look different, I'm going to just get rid of that, is because I use candle trend. So if you come to the sprocket and you come over to appearance, you can use candle. And if you use candle, you can see that on some days, like here, the stock gapped up on Delta here on December 5th. And it obviously closed higher than the previous day, but because it closed lower than where it opened, it shows as a red candle. That kind of drives me nuts. And so I choose to use candle trend. So when you come to appearance, and so it shows the candle not only in relation to today, but in relation to the previous day's candle. So that's why this candle is a filled in green, because it still closed above yesterday's high, but it's dark green because it closed lower than where it opened on that day. So I don't know if that gets you kind of back to where we are. Now, I wanted to show you guys one other thing. And then we're going to look at a bunch of other setups. So if you haven't subscribed to the Trader Talks channel, you're going to want to subscribe to that channel. It's another complimentary resource. There's no charge. And if you haven't already subscribed, there's a button in the bottom right corner of your screen that you can click on. When you first get there, it will show whatever's currently being taught. There's playlists for every class. So there's a playlist for this class, for the Trading a Smaller Account class. I've also, because, we only used to be able to meet once a week for Trading a Smaller Account, and we placed a lot of trades in that class. And so I created this series of mini sessions, which has kind of grown. And at first it was a way to do just a post-mortem on trades that we'd placed in the account. So, and sometimes we'd place, excuse me, 2 or 3 trades. So, we did 3 bullish example trades on one stock, and this was just comparing them. But what I've also done is I've created a bunch of example trading plans, and the list is far from complete. But we have one for long call verticals in here. We have one for short put verticals. We have one for a long call with a 1 ATR target. With the MetaTrade, it was a conditional order based on the price of the stock being above today's high. Somebody's asked, was it a market order? It was a market order to go in if it goes above. And then for those of you who are new to Thinkorswim, there's a bunch of short videos. So, like how I've customized my charts, there's a 10-minute video on how to customize your charts, or a watch list, or the monitor tab, or any of that kind of stuff. So, it's just another resource. And now at the top, there's a bunch of these short candlestick videos, and you'll see like 3-4 minutes. Okay. Yeah. And these are kind of evergreen, although we do go out and we look at examples. And so I did the ones that were single candlesticks first. Now we're going to get into the 2 candlestick patterns like Haramis, and then we'll get into the 3 candlestick pattern things like the Morning Star and the Evening Star. Okay, so let's go back and look at some additional setups. Okay, so we've looked at Delta, we've talked about Amazon, and I had a whole list, and we were starting to go through them yesterday, but if we look at Carvana, and so, if you wanted to practice, again, Evening Star pattern, diagonal resistance breakout, and might used cars become more popular. And so could we do an example trade here? And, we might say, well, we could. And, if you wanted to buy shares, maybe you don't want to buy 100 shares. Could you do that same 1 ATR strategy with fewer shares? Absolutely. And this stock moves a lot. Like in an average day, our 1 ATR on this one currently is, $17. So this stock can move a lot in a day. And so could we put in a conditional order? So maybe we'll come back to this, but I wanted to take you through some other charts. So let's look at pins, and then we'll come back. So Pinterest, an online platform, and do you see this? Like once you start seeing it, you can't unsee it, right? And we may just clear this first. And again, you're just trying to, hit the tops of as many candles as you can. And so we had a breakout, the first breakout day here. Here's my date, March 21st. Gapped up Monday, continued on Tuesday. Today, pulling back. So that might be an opportunity. And again, because it's online, for some investors, they may see that as having more appeal. Now here, this is a diagonal resistance breakout, but it's a different type of pattern. The other ones we've looked at they've looked a little more like, whoops. Can you tell that I like to draw on my charts? But we have this kind of cup and handle pattern, right? And often, frequently we see these, in a horizontal pattern. But can they occur on a diagonal? They can. And is the breakout any less real when it happens on a diagonal resistance line? It's pretty real. And so it crossed, came up for a couple of days, came back to retest, and it bounced. And now we're seeing a couple of days here of hesitation, but this support level, this diagonal resistance line appears to now be acting as a support level. And so this is one that some might, say, well, I'm going to add that to my list and keep my eye on that. How about AMD? Now, tech stock, and man, like this has been on the struggle bus since October of last year, right? And and sometimes I do a shorter term, but you can draw your line however you want. This is your technical analysis, right? And what we're seeing, like this line has been pretty strong. Like it's been, it started in the summer of last year, and then it's continued to hit again and again and again and again. And then it came down and it's like, ooh, it broke out. And then it pulled back for one day and took off, and now we're seeing a pullback. And is this unexpected? No. Have we got this same pattern that we've been seeing all over the town? Our evening star type pattern? Yep. Yeah. So it could be reversing, but do we want to do a bullish trade on this pattern? Yeah, I say nay, nay, to quote, the comedian John Pinette. Is like, yeah, no, maybe we'd put in a conditional order, right? And how might you trade it? Well, you might say, hey, if that bounces up, maybe I do a short put vertical or a long call vertical or a long call. It depends on your account size, right? How about we look at net? Again, are we seeing a theme here? And a couple of months ago, it was like cup and handles and inverted head and shoulders all over the town. And this is like the new, strategy du jour pattern that we're seeing. In order for an index to fall, the majority of the stocks or the heavy hitters within that have to fall to bring that down. And, we're seeing the S&P and the NASDAQ were both down over 10%. And then net, and again, if you're not familiar with this company, it's part of the tech space, founded in 2009, based in San Francisco. And it broke out, and we're seeing some significant momentum here, right? But today, a big pullback day. Right. So somebody's saying like carving out the higher low. Yeah. And like when I look at this, I just think like, hey, what the market giveth, the market can taketh away. And we've seen a lot of kind of whiplashy days is how I describe it. I jokingly say, I think that this has been, this year, maybe another year, sponsored by the American Chiropractic Association, because we're seeing like big down day. Whoops, big up day, big down day. Here we are, big down day, big up day. Here today, I'd call that a big down day. But, on Monday, we gapped up and then just screamed up, never looked back. And it's like, oh, geez, my neck is sore, because like, which way am I looking here? Yeah. Yeah. Like with an evening star pattern, you want this candle to go at least through the majority of the body of the first candle in the pattern. And right now, I mean, this is actually like a bearish engulfing pattern of the candle from 2 days before. Yeah. Yeah. So somebody saying that reminds me, I need to go and see the chiropractor. So, um, yeah, whatever floats your boat. How about we look at who else haven't? Well, American Express. So here's a stock in the financial space and did this breakout, diagonal resistance breakout. It kind of like I look at that and I think of, those high divers that go off the 20-meter board or the 5-meter board. Yeah, I was a swimmer, not a diver, but I mean, that looks like, quite the dive. And then it's really rallied. Now it's back above the 200, but the way I described this yesterday, when you see, a support level that has been in place for a long time, I pulled out my knight analogy, which has been one of my favorites for these many years, where you had all these knights guarding the line. And even though you may have had 20 or 30 or 40 of them, because, we had day after day after day. And to me, every time it comes and hits this line, we've got another knight, joining the force to guard this support level. Well, it broke below that. So, is this encampment now empty and have these guys all gone home, or have they left some guys to guard the line so that when you come up, this old support level might now act as a resistance level? Or is it just going to blow right through it? Or is this the end of this uptrend, and is it going to just start coming back down again? But if you don't want to trade what you think is going to happen, if you're saying, well, I think this is a bull flag setting up, and you know what, it very well could be, but what if you're wrong? Because we had this up, so we're seeing high, higher high, low, higher low, so far higher low. So might you want to say, well, if I think this is going to continue to the upside, what I'm going to do is put in a conditional order. And part of my trade choice might be to say, and you know what, I'm going to do a long call with a 1 ATR target, because I don't want to mess with these boys if they're still at the border. Does that make sense? Yeah. So let's set that up. Okay. So 754 is our ATR on that. So American Express. So we're going to come out here to the 300 strike. Why? Because we can't afford the 290 strike, or the 280 strike. They're a little out of our snack bracket. We're risking too much. And have we got lots of volume on these? We do. Is this stock heavily traded? It is. So, if you go back to that trading plan, so if we look at today's high, and again, this is not a set it and forget it, because if tomorrow this pulls back again, then you want to change your entry. So if you're heading out of town, you might say, okay, I'm not placing this trade today. But, the high is 282.13. And so we're going to make that target 282.33 to get in. So we're going to come out here. We're going to buy just a single. And we're going to make this, first of all, I'm going to create an opposite order. Oh, sorry. Let me do that. Flip it again. Make this first trigger sequence. And then we're going to create two opposite orders. And you may just want to we may just make it one, and then we'll add the exit when we're done. Or we could add a second one, and by done, I meant once we get in. So we're going to make this a market order. And let me bring this over. And we want to get in if and only if it goes above 280, today's high, 282.33. So today's high plus 20 cents, 282.33. And then we want to exit, and I'm going to get rid of one of these because we're going to put both our target and exit on the same line. Whoops. I didn't mean for that to, which one were we on? American Express. Oh, it just lost the whole trade. Well, you know what, guys? We're starting to run out of time. Let's see if I can just do this quickly. Buy. Single. Oh, there we are. I want to delete that line. Well, why would I delete that line? Okay, we're just going to delete the whole trade and start again. So first trigger sequence, right click, opposite order. We're making this a market order. Both of these are good till canceled. And we only want to enter the trade. Oops. If and only if this comes above 282.33. And where is it currently trading? 277. So if this goes at or above 282.33, then we want to buy that call. 282.33. And we're going to save that entry. And then our exit, we're going to make a market order also. And I'm just going to do the math right here. So if we get in at 282.33, oh, just let me come out here to the chart. What's our ATR? 754. Oh, I've got that there. So 282.33 plus 754 is 289.87. So that's going to be our target. And then our exit, $289.87. And then our exit is going to be below. And just, for speed, we're just going to go below. And typically we go below today's low, but we're going to say below that entry, 282.33 minus 754. 274. If it goes below 274.79, we want to get out. 274.79. Save, confirm and send. So we want to get in if it goes above today's high at 282.33, that's 20 cents above. And we want to sell if it goes one ATR above that number, 289.87, so about $7 above, or about $7.54 below. And how much can we make? It's saying it's infinite. Now, our max loss is 370 based on the current price, but we know we're going to pay more for that. Hopefully not more than 500, which is what we want our max risk to be. And we're putting this in as a long call with a conditional entry and a 1 ATR target. So if we're going, what were we thinking when we did this? Here's our logic. Okay, so guys, that's a wrap for today. Thanks for joining me. I think we've covered a lot of ground. So we did an example with an alert. We did an example of a stock purchase with a conditional order, a long call with a conditional entry, and then a long call vertical with a conditional entry. So we've covered a lot. I appreciate you being here. Please hit the like button. It's helped move this up in the algorithms. Subscribe to the channel if you haven't done that already, and follow James and I in the Land of X. Thanks to James for being here today. He's awesome as always, and to the guys behind the scenes for all they do to make this work. Take care, everyone. Bye for now.